Good afternoon. Time to have a look at those markets. Starting off with things on the Asian side, we saw the Japanese markets leading the losses in that particular region. But analysts are actually watching what is happening with regards to the dollar and bonds, which we have seen rise, a pattern of pervasive weakness that we are seeing and concern around the global economy amid high inflation, as well as China's struggles with COVID as well. On the currency side, we are seeing that dollar strengthening to levels that we haven't seen at least since December 2020. Everybody looking at that euro-dollar parity, trying to see whether that would actually happen. We did see that touch just a little bit, but everyone talking about what has happened since then. We are seeing that euro being sapped by the fact that we're dealing with high energy prices, as well as the geopolitical tensions that have analysts and investors concerned that the ECB is behind the curve, especially when it comes to the Fed, and they are unable to raise rates at the same pace that the Fed is able to at this particular point in time. And of course, that heavy sell-off in the euro was triggered by the economic figures that we saw out of France last week. So everyone talking about how the euro bears have come to the market, and we'll see how this actually plays out as we go into the week. Locally, when we look at Tiger Brands from a Sense perspective, that company announcing that they will be extending operations at their deciduous fruit business. This will allow the company to be able to look at some of the offers. They did mention in their Sense statement that a couple of offers have been put forward in terms of the acquisition. If that does go through, especially with this extension, that does save about 250 permanent jobs, with 4,300 seasonal jobs being saved in the interim. To talk to us about the latest when it comes to market developments, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. I mean, it was red on the screens yesterday when you look at the JSE. We're red again. What's dragging us lower?
Good afternoon to you and to the viewers. I think the sentiment has been dented, as you said, when it comes to our intro. Number one, there's a growing number of cities in China that they have to implement or adopt new COVID-19 to make sure, lockdowns to make sure that the spread doesn't get worse. Now, also, you have the looming worries about recession continues to be with us. I don't know up until when. And also the surging gas prices or energy prices in Europe as well is not doing much good. So all we are saying is that as much as we know that inflation is that high, we don't see anything helping to make us start thinking otherwise, that the aggressiveness that we've been expecting from central banks probably might have to be slowed down. So everything is pointing to high inflation, and as we know, some of them have indicated that they will do whatever it takes to make sure that they fight this high inflation. So sentiment is not looking okay, and also we don't think the company news will be right going forward because of inflation.
We'll get to those company news in a short, but tomorrow we've got those US CPI figures, and if you look at the performance of the Rand breaching 17 yesterday, as well as the Euro's performance, the Euro actually bearing the brunt of the dollar strength, what makes you wonder what kind of volatility we're going to be seeing tomorrow once those US inflation figures come out?
I think if the number continues to show that inflation continues to go up and people are already expecting that it will be worse than the previous month, then that gives the case, or it gives the Reserve Bank of the US all the reasons to continue to increase interest rates aggressively. And aggressively here, we expect them to continue implementing 75 basis points. And in my opinion, if they do that for 2 consecutive meetings, then people will be forgiven to start thinking that even a 1% increase will be possible should inflation to go up that high. So I think if the number continues to show that at least inflation is no longer hitting up as much as we thought, then probably we might expect them to start reducing the aggressiveness. But will interest rates continue going up? Definitely they will. The question here is the rapidness.
Do you find that the market's concerns about, the high inflation are slowly being replaced by the idea of excessive interest rate hikes?
I think the inflation theme becomes a bigger theme more than interest rate hikes. But one way or the other, they go hand in glove, because if inflation is high, then we expect interest rates to continue to go up so that you try to tame that inflation. But inflation itself, it kills on the company earnings. It makes life difficult. People, your money start buying much lesser. And the implication of an interest rate hike, other companies tend to benefit out of that, especially if the hike is not that aggressive. The likes of your financial companies, banks, stuff like that, if the hike is not that aggressive, then their interest income will continue to improve. So it all pans down to how rapidly you increase your interest rate as compared to the inflation itself, that it's a green monster that just makes your money to start buying less and less. And as a result, people might have to be retrenched because there's no demand coming out of all those companies that are producing whatever that they're producing. So they might be forced as well to start retrenching people.
So as I mentioned, tomorrow we've got US CPI figures. Thursday was starting off with US earnings. What are you going to be paying attention to when those earnings start rolling in?
Just to see if there's any impact when it comes to inflation on the company earnings. We've seen last week Friday with the job numbers that they were not as bad as we thought. In fact, they were much stronger, indicating to us that the whole thing that we've been worried about the recession has not yet arrived. So we just need another confirmation coming from the company earnings to say that inflation has already started eating into those company profits.
Is there a part of the stock market that looks attractive to you at this point? Because given the noise, given the volatility, given the recession concerns?
If cash is considered part of the stock market, then definitely cash is the one which is more attractive for now.
Right. So let's come back to the idea of, U.S. earnings. I mean, do you get the sense that as well that the dollar could actually play a key role, especially in its strength and how it performs with earnings season, and also affect, I suppose, company outlooks going forward for this next quarter or the next?
I think with company earnings, we have to be careful, number one, that the bar has been set very low. So chances are the earnings might exceed expectations, but that's not the most important thing. As you said, the most important thing is the guidance going forward, that how do you expect them do going forward. Remember, those numbers, they'll also be a reflection of what happened in the previous 3 months. So market participants are more interested into going forward. How will those companies perform? So in our minds, we'll have to try to factor in the issue of inflation, possible recession, and also not forgetting this whole issue about Russia and Ukraine war.
The one other key piece of news, and I know you and I haven't talked about this in a while, is China, and we are expecting their GDP figures to come out on Friday. What's your sentiment right now, or conviction around China, China's tech sector, that region as a whole right now?
China will continue to grow compared to other economies, but unfortunately at a very slow pace. And for the reason that we've seen that their policy of a zero COVID, that unfortunately is affecting the economy because they just locked down and shut down everything. And we've seen when it comes to the industrial profits, their retail sales, almost every number that came out of there, including the PMIs, that unfortunately they were affected by the fact that China, when they try to fight the COVID, unfortunately that gets to be negative for the economy. So yes, come Friday, we don't expect to see a very good number, and we won't even be surprised that even the following quarter as well, it might also show some lackluster growth, all because of, we've seen, as we said earlier, that there are now more cities as well trying to cap COVID by trying to shut down.
We've spoken quite a lot about what's happening from a global perspective, looked at the U.S. for a bit, and I'm curious to, get your sense of how you're viewing our local markets and the JSE. Are there, aspects that you find attractive, or are there aspects in terms of our local economy that are concerning for you, load shedding aside?
It's very difficult, to be honest, to be able to read this market. As we've seen, that you get a nice rally, the following day it gets to be sold. But generally speaking, if one has to force to look into the fundamentals, South African economy is in such a way that, okay, we know our banks are well capitalized, and interest rate increases, if they're not that rapid, might continue to benefit them. But I think one thing for certain is that South Africans, they spend more than 50% of their disposable income on food. So as a result, when you look into the food retailers, I think you might find a safe spot.
The other key piece of information, I suppose, for somebody who does what you do, I mean, we have, chief investment officers, portfolio managers come on the show on a daily. What's the most difficult questions that your clients are asking you, especially in an environment like this where you're not sure, do I sell now? Do I hold? Should I be looking at putting my money into various stocks? What are some of the key questions that your clients are asking you in an environment like this?
When will this mess end? And we don't have an answer to that. But generally, we advise them that where you can lighten up, and then where you have a way that you can get some stocks at a much cheaper level, then just trade the market. Because unfortunately, even if we don't want to accept it, most of the fundamentals are no longer holding. So it's a question of following what is the momentum now.
Before I let you go, what other key piece of information or corporate events are you paying attention to for the next week or so?
You'll continue to watch today with the waiting Tharisa Mining, their quarterly report. We've seen that, unfortunately, when it comes to PGM, the prices, they've decreased and also the production has decreased. But chrome, fortunately, the production and prices managed to go up. So stocks like that, give a bit of a hope that going forward, if the alu production or demand in China continues to go up, then probably the likes of Tharisa will continue to do well. And I think also that piece of good news that you mentioned earlier when it comes to Tiger Brands, I think those kind of good news we continue to look forward to, and we need to see what the president will be saying about the possible restructuring or new developments when it comes to Eskom.
All right, Makwe, let's leave it there. And just to wrap up, of course, today we are going to be paying attention to the Bank of England governor's speech. Governor Bailey will be taking the stand, delivering a speech this afternoon. We'll be keeping an eye on that, as well as US CPI figures for tomorrow. As mentioned, earnings season kicking in Thursday, Friday, coming in alongside with China's Q2 GDP figures, which we will unpack for you a little bit later on at the end of the week. That is it from me. We're going to take a quick break, and when we come back, we'll have more news for you, so stay tuned.